Well, today is Wednesday, the 30th day of July, 2014. My name is Derek. Welcome to today's silver chart analysis. Take a look at today's daily chart. But before we do, I wrote a few notes. As oftentimes before I make these videos, I'll go to different sites like CNBC or different all other mainstream media sources, check out what they're saying within gold and or silver, mainly to try to figure out what they're trying to tell the rest of the world and just get any different cool information or indications for what they're trying to say. And I haven't been finding much the last few months. A lot of quietness, de-hype, loss of interest, I don't care kind of philosophy. And I've noticed that a lot within the gold silver community. And to me, that's a sign that things should be turning around from the bear market when people don't care after a major hype situation, which was the case in 2010, 2011. Yeah. Today, though, I did find some very bullish articles on there, but you'll find them all the time. They flip-flop back and forth, back and forth. Today, they're saying it's smart to get into it, mainly because of all the world conflicts that are going on, whereas a week or two ago, it was a risky endeavor. Flip-flop. Okay. Anyway, I did watch a documentary recently, and I'm a football fan, and I just thought it was cool to see the Peyton Manning 1998 draft story with Ryan Leaf, where you had one of the greatest regular season quarterbacks ever to play the game, and one of the biggest draft quarterback busts ever to play the game. And there was an interesting quote from the Colts president, at least at the time, Bill Polian, who stated the scouts were split 50-50. Those that supported Manning were intellectually convinced, yet those that supported Leaf were emotionally convinced. And I heard that, I'm like, wow, that's exactly the same sort of thing that's going on right now with stuff like 911, Real Money. Whereas, say, in 911, you'll have people giving intellectually driven reasons for why they question it, why they say the story is totally wrong, backing it up usually by that of scientific fact. Yet those on the other side of the fence seem to be more on the emotionally driven side, which part of that is being convinced with an enormalcy bias, where, well, why would they do such a thing like that? Or at least within money, you wake up in this world, not wake up, you are born on this planet and you are taught what money is, these paper rectangles. Don't question it, just go to work, do your job, and that's all you need to know. Part of the emotionally convinced bias. I think that's pretty cool, and that's all I'm going to say about that, at least for now. Today's silver low was placed in at 2046, today's silver high at 2072, 14 minutes apart as the low came in at 834, the high at 848, and it didn't take long before it went below 2060. It fell down pretty fast when it hit today's high. Let's take a look at today's daily chart on my last video, which was Friday. It was a netted price of 2074. Let me draw a better line and a smaller line too. Right in here. 2074, which was that key level. I used to have two lines at 2074 and again over $21. And I've now switched these lines to 38.2% down and what will be 61.8% down. So resistance 3 days in a row, really. Yesterday, it hit it from an 82-cent level. Today, 2 cents lower at 72. And really, since it's staying above this level, I guess it's a lot of indecision because, yeah, you see this bias switching over. This 18 average is now in a downtrend, is finding resistance within it, including former supports finding resistance. You got, well, now looking like two lower highs in a row. What's now two lower lows in a row. So that's bearishness. But until it breaks down this support, it hasn't lost its bullish factor from the lows of 1861 and the 2158 highs in here. Breaking in this area here becomes a neutral bias, and down below here is a bearish bias. But overall, it's a failed move, most likely fast move, and failed move is guaranteed. Either this major breakout is a failed move, or whatever the selling results into is a failed move. Right now it's resulting into this. Maybe there's going to be another leg lower that will continue at boom, and then this would be the entire failed move. One of them is going to be just that, and oftentimes a fast move in the opposite direction is the case, which means if this is a failed move, fast move at least down to this previous low. And on this one, it really depends on where the failed move is located at. For if it's here, a fast move at least into the mid 22s, I would state. But if the move comes down here or here, then I would say the high 22s, because the bigger the failure, oftentimes the bigger the fast move. For example, when it had this break here, I would only expect a fast move to come down towards 20 or so area, at least as a minimum. So that's how I look at it anyway. So this would be the end of this video. It's I think more favored to have a leg lower and come down to the low 20s than it would be to test the low 21s. And I'm going to leave it at that, and or even high 20s for that matter. And I'll talk to you guys later on. Have yourself a great day. Bye-bye.